Guys, I know it's scary there. There is high volatility within the markets and people are being shaken out of their position. The problem is, if things do take off at any moment, you'll be left behind and then you have to re-enter at high level. A little bit of red is nothing bad. And when I say a little, 70-80% drawdown in a bull market, they're quite normal. It just means the weaker hands are being shaken out. Just don't be one of them. Guys, this is not financial advice. This is just your favorite host, FD for Sage5.tv, just sharing with you how he deals with things like this. This is not the time to give up, and I don't think we have reached the cycle top, not just yet. Having said that, I don't have a crystal ball. That might turn out to be the case, but as things stand, looking at everything else, analyzing the markets, where we are in the market structure, I doubt we have reached the current top or the market top for this cycle. I doubt it very much. And in this video, I just want to go through some steps to take during a crashing crypto market, how to deal with it, how to handle your emotions, to see if that helps. Maybe when you have the next drawdown, you may be able to handle it differently. This time, you're probably on the edge of your nerves, edge of your seat, because you're not used to what's going on. In this video, I just want to try and help. But before I proceed, guys, note that this is not financial advice. I am not a financial advisor. Furthermore, if you're from the UK, do not watch this video because this is not directed at UK audiences. Why? Because the UK authorities do explicitly deem crypto assets to be an extremely risky asset class, and they urge you not to participate within this space. That said, if you're from the rest of the world, welcome to Sage5.tv, a channel that brings you alternative views to the mainstream YouTubers and media. We bring a unique approach to the markets, and no, I do not claim to be an extraordinary human being, because I am not, but my actions make me extraordinary, and I'm not one who is going to claim I took action after the event. There are so many YouTubers at the moment who are now claiming they sold near the top or at the top. They knew this was coming all along. They sold, now they are going into the market. But if you rewind or watch some of their videos, back then, they were claiming they were still holding strong. They haven't sold a thing. Now all of a sudden, because things have changed, they sold. They've got the dry powder. They're doing X, Y, Z. And some of the projects they were shilling not long ago, a few days ago, a week ago. So those projects are like 80-90% down. But then if they're claiming they sold, when not long ago they said they just opened a position or they're still holding strong, which is which. So be careful who you listen to, especially the smooth-spoken, fast-talking salesman, okay? Be careful. This is your funds we're talking about. These guys, they're only interested in what's going into their bank, what's going into their accounts, what's going in their pockets. They don't care about it. I'm not going to go too much into this, but I think you know what I'm talking about. Choose who you listen to carefully. That's all I'm trying to say. Anyway, let's jump into these steps to take you during the crashing crypto markets to help you navigate the bloody red crypto market. Maybe you've never experienced these massive drawdowns. How do you deal with it? In this video, just my small contribution to see if it can be of help. When the crypto market is crashing, especially during a bull market, it can be a stressful experience. However, there are several productive and effective steps to take to manage the situation and protect your investment. Yes, some strategies that I would consider myself. Some I'm actually using at the moment. I mean, the first one might seem like it's obvious, but it's not. Stay calm and avoid panic selling. That panic selling is very different to control, especially if it's your first time to face the crypto market drawdown. How do you stay calm and avoid panic selling? Well, you assess the situation. How do you do that? Understand that market volatility is common within the crypto space. Take a moment to assess the situation calmly. I mean, for example, this drawdown, where could this go? That's what you need to do. We're talking about Bitcoin at the moment is dropping to, it was at 74 or something. Now it's at about 52, 53. So you're panicking because you dropped from 74 to 53, but you were also panicking when it was 15 or 25 during any drawdowns like that. Doesn't make any sense, right? Look at where it came from, where it is. Why are you panicking? Long-term perspective as well, your time horizon. Remember your long-term investment goals if you have any, and it's important you have some. If you believe in the fundamental values of the asset you have invested in, if you follow Sage5.tv, of course, where we actually do some DOR or risk evaluation to see if the project you're investing in has got some fundamental value at all. Avoid making hasty decisions based on short-term market movement. Yep, all these are short-term. It might seem like a lot, but it's only a day, it's only a week, it's only a month. Look back in a year, 2 years' time. This will be like a blip. You won't even notice it in the grand scheme of things. So calm down, guys. Calm down. The second step is review and adjust your portfolio. That is quite important. There is an adjustment I just made recently. I moved some of my Camino, sold of course, because Camino was relatively holding well where I bought it at. So I sold some of my Camino to go into Layer 0, because Layer 0 is a big least. If you can do it or you have time, go watch our DUA or our risk evaluation video on layer 0 that we did not long ago. It's probably a week or 2 weeks old. Then compare layer 0 to the likes of Axler, Wormhole, the likes of even Chainlink and so forth. Compare and see what I'm talking about. Layer 0's tokenomics are not bad, not great, but they're not bad compared to, it got a maximum token allocation or maximum supply of 1 billion. The likes of Wormhole is 10 billion, and it's Camino, same thing. So layer 0 is a great project for me anyway. Anyway, if you want to know why I'm saying this, go watch our video that we did on layer 0 and looking at recent price movements and the way it's recovered, whether that recovery is sustainable or not, that's another issue. The way it recovered when the markets are still down, it's incredible. It's incredible because I did take another snip at, I think it was a 274 during the drawdown, and I managed to open a small position at 274 somewhere thereabout. And when I checked a few hours later, it was already on like 334, 330, 334. Layer 0 is a promising project, and if you can afford it where it is at the moment, I think it will do great for me anyway. That's what I'm thinking. That's why I'm just adding slowly to my position on layer 0. It could still go a lot lower than where we are, but I really don't care because I'm looking at where we are. Say $3.50 or $3 to 0. That's only $3. Where it could go, say it goes to $100. That's a lot from where we are. So that's how I assess these things. I look at the balance of things. Where is the risk benefit for me, or the downside? Where is it? So if the downside is from $3 to 0, that's only $3. But if it's $3 to $100, that's a lot. Yeah, that's $97 I'll be gaining. So that's how I balance this thing. You use your own approach. I'm just telling you the way my mind works, my mind functions. That's how I do things. Anyway, so review and adjust your portfolio. Diversification is quite important. Ensure that your portfolio is diversified across different assets to spread risk. Here, you got different narratives, different categories. Try that. You got some oracles, you got some layer 1s, some DeFi dApps, you got some DEXs and so forth. I know some people will just be a Bitcoin maxi or Ethereum maxi or Solana maxi, but for me, if I thought Solana is a great project, which I think it is, what I'll do is I will not open, especially at these levels, I will not open a massive position in Solana. I'll actually go and open a decent position or positions in project built on top of Solana. Because if Solana pumps, this project will outperform Solana. I've experienced that in the past 2 bull runs, so I know what I'm talking about. You do you, of course. I'm just telling you what I'm talking about. The reason for diversification is that it can help mitigate losses during a market downturn. I can see it as well. I mean, the downside is crypto. If the whole market is going down, it just goes down. But like I was saying, I looked at, it's not the only one, but I looked at layer 0. The way it rebounded was epic. Just like that. God, I'm thinking, look around you. Everything else is green, but this is... And then I've got other projects that are holding relatively better than most. And I'm shocked. I'm thinking, what's going on? Is someone buying, or you got a market maker who is defending a level? I don't know. But yeah, things like that. The third step is you need to evaluate the market condition. Market analysis, you don't have to be an expert in technical analysis. Conduct a thorough analysis of market conditions. Look for the underlying reasons behind the crash, such as regulatory news, technological issues, or macroeconomic factors. So there's nothing about analyzing charts here. You're looking at things that anyone can do. Read, look for news relating or connected to the crash. I mean, in this market, for example, the FTX, this is actually a bullish factor. FTX is going to be allocating money or refunding money to those who lost assets on FTX when it collapsed. So that will be new liquidity because they finished selling most of their Bitcoin and maybe other major layer 1s. They finished selling. And then we also have that other exchange, Mt. Gox. They'll be selling. So that's not good. That's not bullish at all. That's bearish. So you need to plan for that. But planning for that, for me, I'm thinking, I'll hold more assets than just Bitcoin. So this will not affect me greatly, if that makes sense. If I believe Bitcoin is a store of value, I don't care where it goes. I'll just keep it as it is. But if you are only in Bitcoin, this is what happens. Because you're only in Bitcoin, you will panic because you're thinking, oh, that's my basket is going down. I mean, there are those who say when Bitcoin sneezes, altcoins, so they catch a cold, they say. So from my point of view is there will come a time when the dominance changes. Because that Bitcoin dominance to switch. Because I think when the Ethereum ETF launches, the dominance will switch and there is no taking that back. Because I think Ethereum, people will be surprised because personally, I do believe that there is a chance, albeit slightly, that the Ethereum ETF could potentially outperform the Bitcoin ETF. It's crazy saying it right now, but I think it's quite possible because I'm of the belief that if you look at what's happening at the moment, the strongest use case for Bitcoin for me is that Bitcoin is a trading mechanism, okay? It's a vehicle trading resources or assets. In this case, you're talking of cash, fiat, money. That's what it is. It's for trading. Whereas with Ethereum, you can use it as a trading vehicle, but it also got other use cases outside of that. It's used as a gas token on the largest altcoin ecosystem within the space. So when we go into crazy bull, Ethereum will actually get crazier. I don't know what the impact of layer 2s will be, but I think Ethereum will actually, in principle, it should outperform Bitcoin easily. But that's easier than said, right? Because you need to have people lining up with liquidity to throw into Ethereum. But I think on paper, Ethereum's credentials when it comes to its spot ETF, in principle, it should outperform Bitcoin easy. That's easy, but that's not how the world works. It's down to where the couch is going, whether the new players have formed a cult around Bitcoin and be part of Bitcoin maxis. I don't think that will be the case, because if Bitcoin can be affected by, say, Germany selling their Bitcoin, come on, and then you're calling the other crypto assets shitcoins. It's being affected by Germany selling their Bitcoin. Mt. Gox redistributing, and we are not talking of small numbers here. You're talking of tens of thousands, and it's being affected by. And yet someone has got the nerve to say these are shitcoins because of X, Y, Z. What about this? What's happening right now? This is serious, man. We're talking. Today is Germany and the US and someone else and Mt. Gox. Tomorrow is someone else. Your Michael Saylors, your BlackRock and stuff. This will never stop. It will keep going on and on and on and on. It's just something for people to pay attention to. If it's happening now, what can stop it from happening tomorrow? Forget about how Mt. Gox got their Bitcoin, blah, blah, blah. That's not the point. It happened with Grayscale recently, where Grayscale accumulated as part of a fund and they had to sell because people wanted to cash out. And Grayscale wanted to promote their new ETF, spot ETF. And what happened? It happened. Easy. So that could happen with Michael Saylor when he starts selling. The same thing comes very because there's nothing else Bitcoin is doing apart from being used as a trading vehicle. That's what happens. It crashes in price. But for other layer ones who actually have other use cases apart from being used as a trading vehicle, I think it will be a different proposition. And I do believe that the Ethereum spot ETF has got a chance, albeit small, it's got a chance to outperform Bitcoin easily if the money managers actually do their due diligence and do proper investigation and research into it. And other layer ones, of course, your Solanas and so forth, the ones that will get ETF applications or spot ETF applications filed. Anyway, so evaluating market conditions is not about looking at charts. Technical analysis, of course, it helps. Use technical analysis if you know anything about it to identify. You can use it to identify support and resistance levels, which an average person can do that. This can help you make a more informed decision about entry and exit points. That's just about it. Anything else, technical analysis is useless. Utilize dollar cost averaging. Yep, that's another investment strategy. I think we covered in one of our investment strategies, our videos in the past. I'll leave some links in the comment section. Be consistent when you're investing. Continue to invest small amounts with DCA, fixed amounts regularly regardless of market conditions. This strategy helps to average out the purchase price of your investments, not investment advisor. This is not it. Reduce emotional impact. DCA reduces emotional impact of market volatility by spreading out your entries and avoiding lump sum purchases or lump sum buys. You can also consider staking during these times of high volatility where prices are just tanking. Stake it, get some rewards, and then when the price comes, you can sell those rewards and get massive rewards in terms of cash. You can have more cash. That's passive income. If you could hold cryptocurrencies that support staking or other interest-bearing accounts, consider staking or depositing your assets to earn passive income. This can help offset some of the losses during a downturn. That's true. Staking rewards, you earn them through staking programs to earn additional tokens as rewards for helping to secure the network. But you got to be careful because there are some rewards that just dilute the value of your investment. Because when you've got staking rewards coming from a token that has got open supply, there's no limit, and the rewards are massive. Whales will just drop like $500,000 here, get the rewards and dump it, they'll crash everything. So whatever we are staking, it will be diluted. So you need to be careful about that. You also need to stay informed, news and updates. Come to Sage5.tv. If you don't have the notification bell clicked on yet, please click that, because some of the content we share with you guys, it may seem unimportant at the time, but some of it could be time sensitive. So just click that notification bell just in case. Okay, just in case. Stay updated with the latest news and developments within the space. Go to Twitter and so forth. The reliable information can help you make informed decisions and avoid panic. We also have community insights. Engage with cryptocurrency communities on social media, forums, and discussions groups to gain insights and perspectives from other investors. Set stop loss if you are into trading. I don't do leverage trading, but if you are, use stop losses. That's part of risk management, right? Use stop loss orders to limit potential losses. This automated feature allows you to set a predetermined price at which your assets will be sold if the market continues to decline. You need to protect your profits as well. If you take profits, stop loss orders can also be used to protect profits by setting them above your purchase price. Avoid over leveraging. Risk of liquidation is quite prevalent within this space. Avoid using excessive leverage during volatile market conditions, especially now. Choosing to go long or short, you have no idea what's going to happen next because you are just doing it. High leverage can lead to significant losses and liquidation of your position. And also, it goes without saying, manage debt. Ensure that any borrowed funds are managed and won't lead to financial distress if the market continues to decline. So there are some people who might think it's a good idea to go and get a loan to invest into crypto. If you do that and you invest into a shitcoin or a meme coin, the market dumps, you are in hook for that debt and you'll be in trouble. You'll be panicking all the time. Or using rent money to invest to make a quick buck, and then the market dumps and you're panicking because you could be homeless. You need to be careful. Also, evaluate tax implications, tax loss harvesting. If you have any significant losses, consider tax loss harvesting to offset gains in other investments. Consult with a tax professional, of course, because I'm not a tax professional, to understand the implications of that strategy. Keeping records, maintain accurate records of your transactions for tax reporting purposes. People, you need to pay tax. Yeah, you need to pay tax. I started paying the higher rate tax within the UK. I was in my early to mid 20s, I think, paying that already against the advice of my accountant. Avoid tax. I'm thinking, no, I want to wear that with a badge of honor. I'm paying higher tax now. It means I've made it, right? Yeah, okay. Keep thinking that. And finally, consider professional advice. Financial advisors, consult with a financial advisor who has any experience with cryptocurrencies. Some of them do, some don't. Professional guidance can provide valuable insights and help you develop a sound investment strategy if you are investing into anything. So seek someone who's actually trying to give you professional advice. There are quite a few there. I'm not one of them. Investment strategy is also something else. You need to work with the advisor to create a comprehensive investment strategy that aligns with your risk tolerance and financial goals, and that reduces your panic because you got goals in the strategy. So in conclusion, guys, navigating a crashing cryptocurrency market requires a combination of strategies and planning, emotional discipline, and a touch of informed decision making. By following these steps, you can protect your investments, take advantage of market opportunities, and position yourself for long-term success. Remember, market downturns are a natural part of investing, and having a well thought out plan can help you weather the storm. This is not it. This is just something to ponder and then do further research and seek professional advice. But if you don't have a plan and a strategy, the market dumps, you are panicking. You invest in shitcoins and meme coins, the market dumps, you're broke. That's quite obvious. So be careful out there, guys, but don't be left behind when the market takes off, because I don't think we've had the psychotopia. Could be wrong, quite open-minded, but I don't think so. Anyway, guys, that's it for this update where I'm sharing with you the steps I am or I could be using to help me manage the challenges of a dumping crypto market or collapsing crypto market. These are bear market drawdowns as far as I'm concerned. What about you? Let me know what you think, guys, about what we just covered in this video. Until the next one, I'm your host, FD465.tv, signing out for now. Bye.